So this is a follow-up video because I have sold 20% of my position in this stock. I have made a detailed video on the entry that I took in this stock between these two yellow lines. This is Medicure. So before you watch this video, I request you to please watch that video because in that video, which is titled Breakout Entry in Medicure, in that video, I have explained in detail why did I buy this stock. I explained the comparatives, I explained the technicals, I also discussed the fundamentals of the stock. And more importantly, in that video, I also talk about trade execution aspect. This video is more about trade management, not about execution, because now that the stock is doing what I expect it to do, now we have to start discussing trade management. And I always say in my training programs to my students that trade management is a department where trading starts to become an art rather than a science. Till trade execution or stock selection, trade execution, position sizing, till that time, trading is more of a science than an art. But when you come to trade management, that is when it starts to become an art. For example, you buy a stock, it goes up 20-25%, like what you see here. So, for example, my buy point is somewhere here. See, it goes up 25.86%. Okay. You buy a stock, it goes up 25-26%. Now, what do? Okay. Should you sell all your shares? Should you sell half of your shares? Should you sell 25% of your shares? Should you do nothing? Should you move your stop loss to 4%? Should you move your stop loss to break even point? So there are an infinite number of possibilities that open up. And the thing is, you have to make a choice. You can't say, I can't make a choice. You have to make a choice. The market will force you to take a choice. And whichever choice you make, there has to be some logical reasoning behind that choice. So in this stock, I have sold 20% of the total amount number of shares that I bought in this range. So I will put a link to that video where I discuss this trade in detail. It's a nice half an hour video. If you watch that video 2 times, you will learn so much about stock selection, technicals, fundamentals, trade execution. That one video is more than enough to teach you my entire strategy. Okay. So I will put a link to that video in this video somewhere. I still don't know how to do that, but I will try. Okay, somewhere in the top right corner, left right corner, you might see some link popping up and click on that link, watch that video, or simply go to my channel in the search bar, write breakout entry in Medicure. Okay, or in the thumbnail, you might see Medicure. So please watch that video before you come here. Now let us look at this stock. So on this day, we are discussing trade management now. Okay, on this day, I waited for the close for price confirmation, volume confirmation. Price has closed above the yellow band, volume has closed above the blue line. So there is no need to sell the stock. So on this day, I did not sell the stock. Comes next day, I decided to wait till the close. Okay, because the volume was coming in, price was going up. So price closed higher. The stock closed 3% higher than the previous day close, and the volume was significantly large, even more than the previous day. One concern during this day was the upper shadow is almost equal in height to the height of the real body. That was a cause for concern. So that indicates supply. The more the height of the upper shadow, the more is the supply on that particular day. But I was not too much worried on that day because of that upper shadow. Is because it's the all-time high. On all near all-time high, you can expect to see such kind of a price action because everybody who has ever bought the stock, maybe 1 year ago, 2 years ago, I don't know, anybody who has ever bought the stock is making money. So some people might want to take some money off the table, take some chips off the table. So if I go to the monthly chart, see, it looks like this. It started here back in 2012. Okay. So whoever has bought the stock anywhere from 2012 in the past 12 years is making money when the price is somewhere here. Okay, so you understand how powerful this is. Let me go back to the daily time frame. So near all-time high, you can expect some profit booking, but that doesn't mean that the stock is likely to collapse. Okay, so on this day, I did not sell a single share. Now this is a very special day. Now why this is special day, I will tell you. This is 1st of November. On 1st of November, as per the Hindu calendar in India, I follow the Hindu uh, religion. Okay, as per the Hindu calendar in India, it's the new year, start of the new year. Okay, so on that day the market is closed. It's a public holiday. However, for traders in the financial market, it is considered auspicious in India to buy stocks on this particular day. Okay, so that's why the stock exchanges are open from evening 6 p.m. to 7 p.m. Okay, so the candle that you see here, this is not a daily candle. This is a 1 hour candle on the daily time frame chart. Okay, so the market was open only for 1 hour on this day, and in 1 hour, the stock shot up 8.86%. Okay, which is like music to my ears. Okay, so imagine you buy a stock here and the market opens on Muhurat trading day. Muhurat trading means the start of the new year, and you are expecting only 1 hour of trading. And in that 1 hour, the stock that you bought from your buy price, it goes up like 25-26%. Okay, you are excited. This is like music to your ears. Okay, so in between somewhere here, like from somewhere here till about here, there was 13-14%. I sold 20% when the price was here. So let me draw a line for you. So somewhere here, I remember selling the stock. I don't know the exact price. Okay, I have to check my account. But somewhere here, 13-14%, I ended up selling maybe here. I think it was near the high of this candle. Okay, somewhere here, I sold 20%. Okay, as the stock was going up, because even from here till here, from this close to this close, that's like a 4-5% move. Yeah, 5% move. So I said to myself that if the stock is giving me 5% in less than 1 hour, that's a fabulous return. I need to book some profits here. Now, the question is this: why did I sell? Wait, let me change the color. The question is this: why did I sell 20%? Why not 25%? Why not 50%? Why not 80%? Why didn't I sell all my shares? Well, the answer to that question lies in the category of stock that we are looking at. Remember that three-part video series recently I made, how to categorize stocks. So if you watched that three-part video series, you will know that this stock, if you make a study of this stock, and if you watch the previous video on this stock, you will know that this stock is comparatively strong, technically strong, and fundamentally strong. The only problem with this stock is the average daily volume, which is less than 200,000 shares traded. Okay. So any stock where the average daily volume is less than 200,000 shares, I consider that to be a bit risky, because there is more chance of manipulation. The big players can make the price go up and down, like what you see here. These are called as shakeouts. Okay. So price manipulation is likely on such kind of small volume stocks. So that was the only problem with the stocks: small average daily volume, but it was not too small. Okay. Comparatively, technically, fundamentally, the stock is strong. What does that mean from trade management point of view? We know what it means from an execution point of view, risk management point of view. But what does it mean from a trade management point of view? From a trade management point of view, if I decide to book some profits, if I decide to take money off the table, I'm supposed to sell less than half of the shares that I own, because the stock is fundamentally strong, which means I should keep more compared to what I sell. So if I got 100 shares, maybe I keep 80 shares and sell the remaining 20. Okay. However, if the stock was fundamentally weak, okay, then this would have been a swing trade, not a positional trade. In that case, I would either sell all my shares or I would sell half if I wanted to do partial selling. See, it all depends on what category of stock that I'm dealing with. Is it technically and fundamentally strong? Is it fundamentally strong? Is it comparatively strong? Okay. If it fits well in all the departments, I should be holding on to that position. I should not be in a hurry to sell the stock because the stock could go up even higher. See, the problem with trade management is the stock has, see, it has closed here. Now, if you sell all your shares here, there is a risk that the stock might double from there. But if you don't sell any of your shares here, there is a risk that the stock might collapse in a single day, right? And can stocks collapse in a single day? Of course they can. Can fundamentally great stocks collapse in a single day? Of course they can. You want to see an example? I will show you. If you want proof as to what I'm saying, look at that candle. This is a technically, fundamentally, comparatively strong stock. Okay. Another stock which is not great as far as fundamentals and everything is concerned, but you see the move in these stocks, you will realize. Look at this, 13% in a single day. So can stocks collapse? Of course. These are stage two stocks. Both the stocks that I showed you, both of them were stage two stocks. So we cannot reject the possibility that it can collapse 15% in a single day. So if you sell, there is a problem. If you don't sell, there is a problem. Then what do you do? That's why I say trade management is an art. So you sell 20%, you sell less than half because the stock is showing strength. If the stock is not showing fundamental strength, you sell half or you sell all to book your profit. This is one way to approach. Another way to approach trade management is you simply make a flat out decision that, okay, this is a positional trade. I'm not going to sell a single share till the price remains above the this blue line, because blue line means positional trade. 50, as long as the stock remains above the 50-day simple moving average, you remain in the trade. That is one way to approach a positional stock. Well, if you decide in your mind that, okay, I want to treat this trade as a swing trade, then you go with the 21-day exponential moving average or the orange line, which you don't see here, which is the 8-day exponential moving average. You can use one of those moving averages to manage that swing trade. So as long as the price remains above the purple line, which is the 21-day exponential, you stay in that trade. So that's a very simplistic, very simplified approach towards trade management if you use moving averages. That's the advantage of moving averages. What's the disadvantage of moving average? The disadvantage is by the time the stock comes and closes below the uh, purple line or the blue line, you would have lost like 10-15% from the top. Okay. So there is value in selling on strength. When I am selling 20% here, I am not looking at moving averages. I am looking at the amount of money that I will be making from that 20% so that I can use that money to finance my future trades. Correct? That is my approach. I am not looking at moving averages, but I am saying that moving averages is another approach to manage the trade. As long as it remains above that moving average, I will stay in the stock. So, for example, if you look at this stock back in November 2023, it was in stage two. You have a look at this base. Okay, this is a nice base. There is a breakout here, breaks out, see, remains above the blue as it starts to go up. It can from here till about here, it remains above the blue line. So you make a huge return on your stock, and all you had to do was nothing. Okay, just watch the stock every day. It is above the blue line, forget about it. Don't even look at it. Okay, so that's the approach which you can use, a very simplified approach. Now, so that's trade management. What about stop loss? You still have 80 shares, right? Assuming you bought 100 shares here, you sold 20. I'm just using 100 as an example, okay? Whatever your position size, you calculate the number of shares. So assuming you bought 100 shares here, you sold 20 here, okay? You still have 80 shares. Where is your stop loss on those 80 shares? Well, my stop loss is at 2659 point. My stop loss is at 2659. Remember, while executing the trade, I had put the stop loss just 25 paise below that blue line. Oh, sorry, yellow line. So my stop loss is almost at the first yellow line, which is like break even, almost break even. And by the way, is in this top in this 20%, I might have made, let's say, 12 to 15% return. But remember, while executing the trade, I had lost 1% on the position. Okay, so you have to take every one of these factors into account to calculate how much money you actually made on the stock. Calculating performance and counting the money is not important. What is important is how did you identify the trade? How did you select the stock? How did you execute the trade? And how did you manage the trade? If these three questions are answered satisfactorily, the money will take care of itself. Okay. Over a period of time, you will learn to optimize your gains. You will learn to maximize your gains and keep your losses at a fraction of your realized gain. Okay. There is a difference between realized and unrealized gain. Unrealized gain is in the air. Realized gain is on in your broking account. Okay. Remember that idea. So I wanted to discuss this stock because I want to start discussing with you trade management. Once you are in a position, how do you approach the stock? You have to think about the strength of the company, comparative, technical, and fundamental. You have to think about where you are going to keep the stop loss. You have to think about partial selling. You have to think about whether it's a swing trade or a positional trade. How are you going to approach it? Whether with the help of moving averages or do you plan to sell on strength? All of this planning should happen on the go as the stock is uh, as the situation develops. So tomorrow, let's say the stock shoots up another 11%. Okay, that's a double digit return in a single day. I might sell the whole positions. I might not wait for the close below the blue line. On the go, I might take that decision because in a single day, double digit return is fabulous. Okay, imagine how many stocks that profit will be able to finance. So you have to remain flexible in your mind. You can't say that, okay, it's positional, so I will stick with the blue line and things like that. The market changes every day. Okay, so you have to adapt to the market. Sometimes I change my plan on the go because trade management, ultimately you are free to do whatever you want as long as you are selling above your buy point. Everything is forgivable. Let me repeat that. As long as you are selling above the above your buy point, everything is forgivable. Okay. So over a period of time, you will develop this skill. You will learn which stocks to keep, which stocks to remove from your portfolio. So that's what I wanted to discuss in this video. I hope this has added value to your trading career, trading journey. I hope this will improve your skill set as a good risk manager. Okay, so please share this video with your friends, family, and business associates. And I wish you a very happy Diwali because I'm recording this video during the days of Diwali, which is a fantastic festival in India. Okay, take care. Thank you so much for your support on this channel. Thank you so much for your time.